Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 31st. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, that geopolitical environment, and how that comes to impact the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further for you guys and layer on top of it the option strategies that I'm doing on a daily basis in order to increase my overall yield in my portfolio. I do that following specific guidelines that I lay out in my webinars for you guys to follow along as well. That way, you guys can take your market assumptions, implement option strategies around those assumptions to increase your probabilities of success. We're not just picking option strategies out of the hat. No, we have a guideline set up for you guys to make it a streamlined process in finding the right option strategy for any given assumption. All right, so without further ado, I usually talk about the economic data. Well, it's a Monday. We don't usually get a whole lot of economic data on a Monday, and today is a perfect example of that. Really, pretty much nothing across the board on economic data there. So it is also a holiday in Great Britain. Not that that's going to really deter a lot of people from trading, but we will see a little bit of volume kind of sucked out of the overall market there. We also have a Fed governor speaking a little bit later on, or actually already spoke this morning. So nothing really to see there on the geopolitical or our interest rates really. All right, so let's talk about the markets now. Crude oil still stuck in the mud right here at around $43, building up a nice volume node there as the price is being accepted. Now, in a couple of days, I talked about probably this week, and I'm sure it's probably going to happen here, is we're going to see the 50-day cross back over the top of the 200-day, which is signaling bullishness in the market. But again, we've talked about this with the supply and demand of crude oil. There's just not a ton of demand out there, although there are people getting back on the streets. It seems like traffic is starting to pick up, at least in and around where I am, as people are starting to go probably back to the office at least part-time. So people are driving, but again, the main driver of crude oil is going to be in the form of the manufacturing sector. That's really where we're going to see some the demand start to pick up for crude oil when that starts picking back up. All right, gold moving again. Well, it's not really higher today. I was looking at the chart. It kind of seems a little bit higher, but that's just because we're higher than where we opened. It is in slightly negative territory, but we could call that unchanged for the most part. I do think that as we're seeing here weakness in equities, that we will probably see a little bit more of a lift in gold futures. Another thing to keep in mind is we are still battling back and forth between the Democrats and the Republicans as to the next round of stimulus. When is that going to come and how big it is really going to be a driver for gold futures going forward. Because if they come out with a big stimulus, that means they got to turn on the printing presses, print more dollars. That weakens the overall dollar, and because this is a dollar-denominated product, should give it a little bit of lift. You could also see that happen over there in crude oil, but I think that it's going to really be kind of stuck here for the foreseeable future. All right, bonds moving a little bit higher today by about 19 ticks on the day. I think it's going to migrate back towards that 180 handle. We've been talking about it. Interest rates are really low. I was actually talking to a real estate agent. She's saying it's the best environment she's seen in like 20 years of being a real estate agent. And that, a lot is due in part to people being able to get a 30-year mortgage for less than 3%. That is just amazing that people can buy a home at 3% on a mortgage. All right, so bonds slightly moving higher, and again, that's probably because we're seeing weakness here in the equities, and that's going to cause the VIX to start to spike. Dow Jones Industrial Average off by 200 and almost 40 points on the day, really starting to look like we're going to look to correct. It is above the 9-day moving average, which is showing short-term bearishness or bullishness, and we also had the crossover of the 50-day. This is what I was alluding to, and the previous chart is when we see that 50-day cross over the 200-day, that is signaling long-term bullishness. But again, Dow Jones Industrial Average just off slightly today as there's some profit taking going on. It looks like NASDAQ positive. We got a mixed bag here, positive by about 65 points, but bouncing up against this upper trend channel and on this parabolic move that we have. Again, this is the old trend channel. I was kind of expecting us to start to weaken a little bit and slow down this upward trajectory to maybe a little bit slightly less positive, but still positive at the end of the day. We're still above on top of that trend channel there, though. Even the S&Ps are starting to see some weakness here today. As we can see, they're off on the day by about 7 points. So tech definitely still leading the way in the overall markets. So let's get up without further ado onto a couple of other things here. The overnight inventory got a little bit long off the open, and then just weakness throughout the day and exacerbated throughout the day so far. All right, so let's talk about my trades that I've done. Intel, you guys remember, I fired away at this trade when we were on camera. I just bought some of these Intel outright, didn't do the stock, or decided to just go in there and buy some stock. And I bought them at $51, I believe was my price, $51.27. So getting mechanical here, doing a little bit of dollar cost averaging. And if I don't get that dollar cost averaging by having stock put to me, then I lower my overall cost basis on this trade that I have as a long at $51.27. So I had gone in and sold the August 45 puts in there for 43 cents. Bought those back for 14 cents back in early August. And then again, rolled those out in time, went to the September, sold those 45 puts at 65, bought them back at 10 today, and added to the position by selling some October 45 puts again at 49 cents. So I've lowered my overall cost basis on this just slightly more than $1. So as you can see, I am basically slightly above water now because I'm long at 51.27, but I've lowered my overall cost basis by about $1 in this trade. So that puts me into positive P&L on this Intel trade. That is, textbook how we do this when we're trading. If you have a portfolio, you should be staying mechanical with it. It's not just going out there and buying that stock all the time and riding it out into the end of the day. What we're trying to do here, especially what I try to teach here, is, if a financial advisor is calling you up and saying, hey, it's time to buy some Intel, well, maybe the idea should be, let's go in there and sell some puts, wait for that stock to pull back, and then get good strike location and good entry points. But if we don't get it, then we overall lower our cost basis on some of those stocks that we already have in our portfolio. And this is exactly what I'm talking about. Yes, had I bought this Intel and just held on to it at 51.27, I would be in negative on the overall P&L. But because I've stayed mechanical with it and lowered my overall cost basis, this trade is actually now a positive in my P&L. So that's what we're trying to do. And if we pull back to that 45 area, which is below some of my Fibonacci's there and the value area low, well, then I dollar cost average on the trade, right? And lower my overall cost basis on that trade, or my break even, I should say. Yes, I am adding more stock, but we're doing that all the time anyway, so why not be mechanical and stay with it and wait for those 45 strikes to be able to buy those. All right, and the other thing that I'm just looking to do is in Uber. If you guys remember, in this trade, I am short. The market is coming back. I sold some puts in that, but the market is starting to make a little bit of a pullback. We could start to see Uber hover in and around this area, right around $32 a share. I think we're going to get a little bit of a pullback there. Am I going to see those 29s again? I don't know, but remember, what I've done is I've gotten short this Uber because I had some puts. I had sold some puts, sold some calls in there, and that made me short the overall stock. All right, so now what I've done is gone in there and sold some puts in there at 29, trying to lower my overall break even on this trade. I'm collecting a credit on those puts, and if it goes down there to 29, then basically I'm out of the trade. I get to keep this collection of credit that I got, but right now just trying to stay mechanical again with this, that we have stock in our portfolio, or even if it's short, you can do the same thing as what we're doing over there in Intel. That's what I'm trying to do with the, in a sense, what I'm doing with Uber. That it's a covered put position is really what it is. We all know what a covered call position is. You're long stock, you sell a call at a certain level to get out, and if it doesn't reach that level, then you lower your overall cost basis. Well, when you're short a stock in your portfolio, like I am with Uber, then I'm selling those puts, and it's a covered put position, because if the market comes down to that level, then I get out for a scratch and get to keep those credits. If it never makes it there, then I've lowered my overall cost basis on that trade, and lowers that break even very similarly to what we've talked about with the covered call strategies. And that's about it. I do have one other thing that I'd like you guys to take a moment to go over, and that is the disclaimer. Yes, we are an educational company, so I'm not trying to solicit you guys to do these trades that I'm doing. What I'm trying to do is teach you guys how to be mechanical in your portfolio to stay ahead of the game. That's the best way to increase your overall profitability. All right, so take a moment, go over that so you know your risks and what we're trying to get across here at Pro Trader Strategies. Follow us on Facebook at ProTraderStrategies.com. We've got a lot of great content out there, and if you've been missing my roadmap to trading options, check that out. I think it's a really great way to follow the guidelines as we're setting up for these different strategies, okay? Play along with us. More the merrier. You guys drive the content, so I'd love to see you there. All right, that's all I got for you, other than if you can't take that on a whiff, take it easy.